All right, everyone, welcome back to the Small Business Tax School. We have an extraordinary guest today, Ron Cruthers, and we're really grateful for him. Ron, thank you for being here.
My pleasure. Happy to be here.
Yeah, I'm really excited to have you on because of your vast knowledge of how to save people taxes, but I'm really excited because you're really passionate about it. It's not just something like you dance around, you actively help people look for ideas and strategies to reduce their tax bill, which is what this show is all about. But before we get into that, let's just have our audience learn a little bit about you. So tell them a little bit about where you're from, how did you get into the tax world, why did you get in the tax world, and then we'll dive into some of the actual tax strategy.
Yeah, that's a great question. I am born and raised Southern California. Grew up on the beach in Santa Monica. Later went to high school a little bit inland. And a couple interesting things there. First off, I was my high school's valedictorian, and that was a long time ago. So the only reason it matters, and I'm bringing it up now, is we did not have money for me to go to college. So I didn't go right away. And then a couple of years later, I figured out I had to get a real job. And so I was going to school to be both a CPA as well as a certified financial planner, kind of marrying those two. And they both required a bachelor's degree, which I didn't have. So I convinced each to accept the other as the bachelor's requirement. And I was kind of working my way through finagling that when my accountant at the time ended up going to jail.
Oh,
Now, it should have been pretty clear because you would go to his office, and you guys know what accountants are like. We're kind of a boring, stiff profession. And I've never been to a Mexican whorehouse or brothel, but I kind of imagine his office is what one of these look like. It was like funky colors. His girls were dressed totally inappropriate for the office. And the desk that he would work on was plexiglass with like a fish tank underneath. And he was like, oh man, we're going to save you all this money and we're going to do this. And literally every tax return that he did was a work of fiction. So he just totally made stuff up. And I wasn't yet going to tax school. That's what got me interested because I knew there was a legit way to do it. And I saw how much people were excited to be saving money in their taxes, how much they hated paying them. I hated paying them too, even though I didn't make enough to really pay much of anything. And so that's what really got me interested in that journey. And then over the years, just looking at clients' returns, it really became a big deal, Justin, where it was like, does your person do anything other than just record what happened? Is there any active planning going on here? And usually the answer is no. And so we're like, man, a little bit of planning, nobody goes to jail, you can turn around and save a small fortune. And so that's kind of how I got into that. And sorry if that was super long-winded and you're sorry you asked, but that's the background.
well, that's a great story, and I really love what you said about the vast majority of people just hire a tax recorder, and its important role that recording your taxes is you have to
The
do it.
government, the government thinks so. Yeah.
Right. Yeah. Yeah. The government requires it. And so you have to do it. But the vast majority of people that hire tax professionals, they're just hiring a tax recorder. And there's no forethought. There's no insight into, hey, you paid this much, but you could have done X, Y, and Z to pay less.
Bingo.
What's next year? Come with a plan to execute X, Y, and Z so that when we pay next year, it's less. That doesn't really happen. And so it's awesome when we meet professionals like yourself that are like, let's be proactive. Let's go ahead of the schedule and find ways to reduce this along the way.
We call it financial dry cleaning, what most accountants do. It's literally like you dump your bag of stuff and the guy gives you a ticket. You come back later and pick it up. It's all pressed and organized. Hey, man, you owe me this, you owe them that. See you next year. And we're like, no, your accountant should be someone on speed dial that you're talking to multiple times throughout the year, particularly since this is small business tax school. The minute you run a business, you open up the entire playbook, 81,000 pages, I think is what the code's up to now. And you open up that entire playbook. that you can take all the same write-offs that Apple and Facebook and Meta and whatever they call themselves now, that those guys are able to do. You can make those moves, having a little business even out of your spare bedroom. And that's what we try to help our clients to realize. And the reason, again, sorry for the rant, is because when you pay $1 of taxes that you didn't have to pay, you didn't lose $1. By the way, this is true of any expense. What you lost was either the enjoyment that that dollar would have brought you if you just spent it on lifestyle, or more importantly, for your future lifestyle, every dollar that that dollar would have earned over your entire lifetime from that point forward if you'd have put it aside for later. So you didn't lose $1, you might have lost 5, 10, 15, or 20 or more dollars because you overpaid $1 to the system that you didn't have to. And obviously most people that aren't doing this proactive planning are overpaying a lot more than $1.
Yeah. I've said the stat before on the podcast, but the Senate Small Business Committee, and it was a few years ago that they came out with this, but they stated that the average business owner is unnecessarily paying about $11,000 per year in
Really?
taxes.
I've never even seen that stat. I wrote that down.
Yeah.
Thanks, man. I learned something. Can I go? Can I go now? No,
Yeah.
I'm totally
Yeah.
good.
Right. Yeah. So I mean, like, I hope our listeners can feel the energy that you're bringing to this, because it's obvious you're passionate about it. But is there any more you'd like to add on, like, why you're so passionate about this? Like, what made that click? Like, you're at that CPA that was breaking the law, that had the extravaganceness, but how'd you switch to, like, wow, I'm really excited about helping people keep these dollars?
You know what? It's because every day first of all, I like being good at my job. All right. And I have an ego. So I like being told I'm good at my job. All right. I'm shallow enough totally to admit it. I like my team being good at our jobs and being true professionals. And so every day it's kind of fun. And look, tax season sucks. I'm not going to lie. We all hate anybody that does that, hates going through it. But it's over now. And hopefully in another week, I'll forget all about it until next year, how badly it sucked. But at the end of the day, hey man, we're like literally changing lives in this office, because if you get your money right, and taxes are one of your biggest expenses if you're successful at all, if not the biggest expense. I mean, like, we joke because at least your kids will eventually, hopefully, move out and kind of support themselves and come off, where you're having to support them. Taxes don't ever go away. And so if you can learn to get that right and pay your fair share, which the government loves to chat about when they're not paying their fair share. And like, my fair share is the least amount that I can legally pay them. And by the way, the Supreme Court even ruled on that years ago. And they even went so far as to say there's nothing wrong with trying to arrange your affairs so as to have the smallest obligation to the US Treasury, nor is it even unpatriotic.
Yeah.
So that's what we try to do. And it's kind of, I won't, yeah, it's fun because we get to show our clients stuff that most of them have never seen. And by the way, we do a lot of reviews of tax returns, and we're like, hey man, if your guy's doing a great job, we're going to be the first to tell you. Like, oh, your dude's awesome. And if they're out of state, like, we want to know who is it. We'll refer clients to them. But that's kind of why, it is an area of, yeah, passion's a pretty good word for it.
Yeah. Awesome. Well, thank you. Well, I'm really excited for you to share just one strategy for our listeners. And it's something that I think people have heard, but maybe there's probably a lot of people that haven't, but it's the ability to pay your kids, but save taxes at the
Yes,
same
sir.
time.
Yes,
So
sir.
let's dive into that with you, and we'll just go back and forth and see what we can discover and help these business owners start understanding, how do I do this? What's the process?
And by the way, if you don't have kids, don't tune out right now. Stay with us, because either you may have kids or grandkids or something like that, or this might apply to a family member. But I want you to understand the strategy of how powerful just one, really, well, we'll call it two chess moves, if you really want to optimize this strategy. So, first of all, the number one source of free labor for most businesses getting out is if you have kids, you put them to work. Now, I did it even long past the point that I needed the free labor when my kids were little, because I wanted them to see the connection between work and the lifestyle that we lived. We're not a trust fund family. I don't come from wealth. You know, like I told you guys, my parent and my dad was awesome. He took great care of my mom. My mom's set. My dad passed away a few years ago, but he was a hardworking, blue, eventually white collar worker. And so my kids aren't going to get a trust fund. So I wanted them from very early on to see work. Now, the IRS gives me a benefit, which is I can pay my children. And there's some rules around this we'll get into in a moment, but I can pay them and deduct it from my tax rate, which, if my business is successful, is higher than theirs. Um, I can deduct it from my return where it might be 22 or 24, 32 or 35%, plus state of California, since I live in California, one of the highest tax states around. And look, I live by the ocean because I get asked all the time, well, why don't you move? Like, my family's still here. My house payment is basically a car payment, and you can see the ocean from both my office and my house. So, yeah, you know, you take the good with the bad. But so now I get a deduction that might be 40% for transferring through my business money to my children for work that they do. So I might take, if I do $10,000, and of course, again, we'll talk about what's reasonable compensation in a moment. But if I give them $10,000 in a year, I might save 4 or 5 thousand on my taxes. And now I can even put that money into a Roth IRA or something for them. That's the second part of the strategy if you want to go that far. Or I can just let it stay in their account for college. I don't really like 529s. That's another discussion. But there's things that I can do with it. But I paid them 10 and I saved 4 to 5 thousand on my personal return because it came off.
Yeah, and I think
Questions
people,
so far, comments, Justin, and
yeah,
then I'll
I think some people are like, okay, I had to contribute 10 to only get 4 off, but you were going to pay for stuff for them already. Like, you had to pay for their
totally.
food, their sports, and all their other
Exactly.
stuff. So all you're doing is rerouting the money instead of coming from out of your pocket, it's coming from the business's pocket. So you're getting the deduction at the same time. And they're just still spending, like, some of it's going, maybe some of it does go into the IRAs and those Roth accounts that make it a really cool strategy where it just passes through all the way tax free. But, I think it's important for people to realize that all you're doing is reallocating the dollars because you were going to pay for
Totally.
stuff that they were going to do anyway.
Exactly.
So it's not
Exactly.
a negative ratio here. It's positive because the 10,000 is going to be used no matter what. Now you get 4,000 off by paying them through
Bingo.
your business instead of through your personal line.
Bingo. Now, there's a couple of rules around it. So let's chat about those real quickly. Number one, has to be reasonable compensation. So, in other words, you cannot pay a kid $100 an hour to do bookkeeping work because bookkeeping goes to from 18 to 25 in most places of the country. Now, my daughter does some of the bookkeeping for us. I pay her a little more than that, but not a lot. And she's 30, by the way. Yeah, she just turned 30. So again, I had to think about that for a minute. I'm like, oh God, did I miss her birthday? Like, no, I got it. She just turned 30 this month that we're recording this. Anyway, so yeah, that's reasonable. I can pay my kid 30 for some of the bookkeeping work she's doing. The average is 18 to 25. I couldn't, nor would I pay her $100 an hour. That again, that would, if the IRS came to audit that and ask about that, they're going to be $100 an hour for bookkeeping. Yeah, no. Now, let me tell you something. I could pay her $100 an hour for, or $200 an hour. If she was managing my social media account or helping create a website or anything related to digital marketing, because most of my social media accounts I run myself, but I have one that I don't. And let me tell you, what I pay to have that managed for me is not cheap at all. So again, if my kids were still at home, I'd be like, y'all learn this. I'll pay you guys. Now, am I going to let them keep all the money? No, because they lived in the house and they got to eat the food, but I would let them keep some of it. So the first thing is it has to be reasonable compensation. Second piece to this is if you are a corporation, you will want to create another entity for it, which is no big deal. And the reason is, if you're a corporation like an S or a C or an LLC that is not a disregarded entity, then the government, because you are not your corporation is not you, the government wants you to go through and pay payroll taxes on your children that are under the age of 18. And so now you got to handle FICA, BICA, MITA, FUTA, TUTA, BUTA, MUTA, SUTA, HUTA, all of those like miscellaneous
Yeah.
taxes. But if you are a sole proprietorship or a partnership where both the two parents are the partners, then none of that applies. So even if you have like an S corporation, then we're like, great, create a marketing company or a bookkeeping company. It's a piece of paper. Your accountant will charge you, 50, $75 more to fill out the return, the extra piece of paper, and then have your S corp or your C corp engage that sole proprietorship, pay your kids right out of that. And who knows, you might, depending on what you're already doing, you might even get some additional deductions for that extra business that you weren't taking on your S corp or your C corp or whatever. So just keep that in mind, because we have a client who forgot that. He's a new client, so he did it before we actually sat down, but he had heard me talk about it. And then when he went to file it, he was like, hey man, I got all this stuff from the state and they want me to register. And I'm like, right, you did it from your corporation, didn't you? And he's like, yeah, I did. And I'm like, okay, we'll follow the paperwork they want for this year. And then next year, just move it over to your wife's business. So those are really the rules. And then you are required to send them a W-2 at the end of the year and a W-3. If they're making less than $12,000 and you didn't withhold anything, they don't have to file a return. Simply you issuing the W-2 and the W-3 is good enough. You can do it online. There's different sites that'll help you do it. And it's a 5-minute process. It's like put in your name, your employer identification number, your address, put in their name, their address, their social security number, put in the amount you paid them, boom, you're done. And you do, this is very important, until they're 18, you ideally want to pay them wages. W-2 wages, because if you 1099 them, now they have to file a return to account for that. Once they're over 18, you can make them an independent contractor, and there's actually still a way around the payroll tax rules if it's for a single project rather than ongoing stuff. But you get a little more into the like, yeah, you should probably talk to somebody about this before you just rush off and do it. If you're paying them wages out of your sole proprietorship or partnership, you just do it. And you don't ask your accountant's permission. You tell them what you did. You don't need to ask anybody. And here's one that'll blow your mind. You ready for this, Justin?
Yeah, I'm excited.
How old do you think the kid has to be before you can start paying them?
That was going to be my question, because you said reasonable work. So like, how do we justify reasonable work? And I think I know the answer, but I want our listeners to
I
start
want you
pondering and
guys to
thinking
think
it, and
about
then we'll give you the answer.
Everybody gets this one wrong. All right, you want to give them a minute to think about it and talk about something else and come back to it, or do you want to just sit here and we can think?
Yeah, let's go ahead and give it to them, because I think they're probably pondering. It's there and they want to say something, but let's see if they're right.
6 years old.
6. Awesome.
What was your number? Tell the truth. Don't lie.
So I've heard that you can pull it off if you make them models. Like you can pay, not, you can't pay them a ton, but you can model them younger, put them on your website, put them on advertising material, and that type of things.
They can model under 6, but 6 is when the IRS says they can actually do work. And by the way, if you guys think that's crazy, go to an immigrant-run restaurant, donut shop, dry cleaner, something where, I mean, maybe not a liquor store or a bar, but you will, if you go on the weekend or during summer, you will see the family helping out. And that includes kids, and that includes grandparents, and that includes, and it's not really as big a part of American culture, but you will see them. And my buddy owns an Armenian restaurant. Technically, I own it. I won it in a drunken foosball game, but I don't like employees, and I don't know how to cook Armenian food, so I let him slide on it and let him keep his business. But technically, I did win the game fair and square, which included the restaurant. he puts his kids to work. I mean, they're all older now, but I mean, 6 years old, man, they were down at the restaurant, bussing tables, seating people. And he kind of had the same reasoning I did, is like, they eat the food, they live in the house, they need to help work in the family business. And it's kind of cute now because they're all grown. A couple of them are married. They all help out with that business. All four of them work there, and occasionally the spouses show up and help. So,
Yeah. No, I don't have any. I mean, like it makes perfect sense to me. It's honestly for me, this is one of the coolest strategies because I get to, it's sort of what you hinted at a little bit with how you paid your kids, is I get to teach them the value of work and they still get the reward. Like they get the money, like they get to earn something that's actual dollars,
totally.
which is what the real world is. It's
That's
not
it.
fake, like doing your chores to get money. It's actual work that they're getting paid to do. They're employees of
Totally.
you and they're getting paid to do it. So they get to see
Yeah.
it right early on, 6 years old. Boom, I'm making money by
And I made
working.
mine work before that. I don't think the IRS had clarified those rules. Like my little vegan hippie love child that's about to graduate from Berkeley, because of course, right? I mean, when she was like 3 and 4, we sent a physical newsletter, and I made her put the stamps on it, and they'd end up. She put the mailing labels on it, and they'd end up upside down and in her hair and stuff. But it was like, hey, and I didn't make her work more than a few minutes at a time, right? Because she was like three
Right.
and four. I don't even think I bothered paying her for it. I'd give her like a couple dollars, but I wanted them to realize, like I said, we work in this family. We're not from money. We got to work. And
And then
it's
you
nice
can
because
even take it one step further too. I think like the value of work, which is a vital thing, which I think our society's lacking, but you also are giving them money. And so now you can teach them financial principles and you have at
totally,
a very young age, teaching them budgeting, saving, putting money into Roth IRAs, teaching them all that stuff. And it starts to become ingrained in them, which is
you got it.
completely lacking in our society at a big level. So it's a huge opportunity for business owners to change their individual world. There's like in the because society's changed by individuals, and so if families and businesses are implementing these tax strategies, but they end up being societal changes, it makes a big deal in the long run for our world.
It totally does. Now let's talk about the power of compound interest, because if you make them put a portion of their money into savings, all right. So, and again, there's always, you can kind of overpay them and for what they're really doing and not let them keep everything. But let's say you're letting them like fair wages for what they're doing. I didn't do this with my kids and I regret it, but I also now would make my kids put 20% of that money aside. Be like, sorry, even if I overpaid them 20%, I'd be like, you have to get in the habit of saving 20% of everything you make. If they even put $1,000 into a Roth IRA at 15, $1,000 at 7% interest, which we can argue all day whether that's high or low or whatever. One $1,000 contribution at age 65 is $29,000. One. Now, if we did that every year, or we did 5,000 a year, your kids can end up fairly well off just from the money that they saved while they were teenagers, and while they were little kids, if they did that for a few years. And yeah, inflation sucks. It's not going to be worth quite what it is. But you're getting them in the habit of saving 20% of what they make, which is a really good number, absent any other metric. We have the fanciest financial planning software because we do financial advisory work as well in my firm. But at the end of the day, we're like, look, save 20% of what you make. I can prove it to you with math. And if you're way close to retirement, you might need to do more than that. But if you just do that and never learn to live off 100% of what you make, and as you make more, keep those numbers proportionate, you will be able to retire well in advance of the normal retirement age.
Yeah,
So,
this is really cool. I mean, like I wish people would. I wish more business owners would grasp this because we. I mean, yes, you get to save taxes, but like if you're doing what you're talking about, like you're helping them save in a tax-free environment that will, like if you, that 20% thing will change their life. Like it keeps them
it totally
liquid,
will.
it keeps them safe. There's no like even if there's downturns, they've already saved a whole bunch of money so they can go get it. They don't have to
Got it.
file bankruptcy. They don't have to sell a whole bunch of stuff. It's already there. And so it protects the family financials, and then it just builds on itself, and their kids will start doing it. And you can create an entire chain reaction by just
Well, it's
one.
how you start. I'm sorry to interrupt, but it's how you
No,
start to create generational wealth, because it's not just the worst thing you can do to a kid is give them money. I've seen it firsthand in my own family on the other side of the family, on the in-law side, and it just didn't like it's ruined people. Inherited wealth has ruined way more people than it's ever saved. But the principles of how the money was earned in the first place, that's what makes somebody rich, and
yeah,
that's what creates generational wealth.
yeah,
And
I
so,
love it. And it all started from the desire to save taxes.
yeah,
It
yeah,
all began
stick
with
it to
that,
the
and now
man.
it's
We are going to stick it to the man in the most legally appropriate way possible, because, yeah, they're just going to spend it on weird crap anyway.
yeah,
Uh,
yeah. So, is there anything else that we haven't addressed yet that you think is important for business owners? They're like, okay, I want to start doing this. What do I need to do? Is there anything else that you can
oh,
think of that they need to know of
those are
taking
really the
action?
main pieces. And by the way, it doesn't quite work as well with nieces and nephews, but what you can do is you can pay them for a project. So if you want to work with a niece and a nephew, and again, the sticky part is now we get into self-employment tax because they're not your direct children unless you adopt them or something like that. Which, look, I mean, it's one thing to save taxes. It's another thing to adopt someone just so you can save taxes. That might be a little over the top. But
Right. Yeah.
then what you do is just do it per project, because the IRS has ruled that a project does not rise to the level of self-employment. So now you turn around and pay them on a 1099 for a project. But again, I'm going to state this. This is not a do-it-yourself at home project. You do want to get some tax advice. The relevant case on it is the Batok case, Batok. But you don't want to just do it, because if the IRS comes and asks about it, you want to know what the answer is, so you don't end up having to, pay the self-employment tax or whatever, or get into trouble that way.
Right.
Again, we like saving as much money as legally possible. We don't want to end up, with anybody, like, you really got to piss them off to go to jail. You got to go out of your way. And like I said, that guy that went to jail that I first described was literally creating works of fraud. They were just
Right.
making stuff up that out of thin air, which is the other reason that we always encourage our business clients. You got to know taxes. You don't want to trust your CPA, because nobody cares about your money as much as you do. And most CPAs, most of their training is on GAAP accounting principles, generally accepted accounting principles, not how to save money when you're filing a return. And so on the one hand, you need to keep them honest, but you also want to make sure that they are taking everything that you can. So you balance that line, not leaving
Yeah.
money on the table, but not doing things that shenanigans. And like I said, that's what got me fascinated with taxes in the first place, was seeing that one guy go to jail. And it happens every year. Somebody does. And you don't need to do that to save a lot of money on your taxes. You just need a
Right.
basic understanding, an accountant that's proactive, not reactive.
Yep. I love that. Does that apply for grandchildren too? The nieces and nephew rule, or is that
Man, you
different?
know what? I got to look that one up, because now I don't remember. I believe it is only direct children, but you know what? I will get an answer for you, Justin, on that one. I believe it does not, but let me confirm that. And that's sadly the one thing with taxes that I say every day is like, man, I don't know. Let me look that up, because Congress changes it all the time. I'm going to
Right.
go with no, but let me find out if they put something in one of the newer bills that lets them do it.
Okay. And
So,
here's a just a challenge for the listeners. Like, if you are a grandparent that is interested in paying their grandkid, and now you don't know the answer to that, now you have a reason to call Ron and get the answer.
you're welcome to call. We offer to do a tax review. That's great. I appreciate the plug, Justin. And we're kind of, I like to think we're more fun than the average accountant to work with. I got a pretty happy crew. And but definitely we will review your taxes and give you an idea of if your person's doing a good job, or if they're missing a little bit of stuff that generally is salvageable, or like if they just missed a ton. And you want to know that this is
Right.
one on people who get second opinions all the time when it comes to medical treatments. Hey man, you do not want, and I never, like, I'm going to give it an analogy that, please, if anybody's had cancer, I don't mean it, but you don't want to find that you had slippage and expenses eating away at your money in the way that certain medical conditions can eat away at your body, because they're both equally important. Obviously, yeah, your health is way more important. I'm not comparing it, but what I am saying is, again, that $1 grew to $29, yes, over a longer period of time. So you really don't want to give them a dime more than you need to. And then, by the way, if you feel bad about it, God, I don't know, I saved all this money, and you want to send them a tip, you can just write a check to the US Treasury. They will totally cash that check. I don't know if you get a deduction for it or not, but seriously, I live in California with all the celebrities. Like, people just need to pay more taxes. It's like, yeah, all right, let's see you writing a check to them
Yeah.
for extra.
Yeah. Yeah. The best way to pay extra, well, besides writing the check, is just don't plan. That's the best way to do it. If you want to pay extra, just go out on.
If you're not proactively planning, then just keep doing what you're doing, because the odds are there's stuff in there that's getting messed.
Yep.
And at the very least, occasionally a client will be like, yeah, I don't really want to do that strategy. We'll be like, great, you know what? Don't do it. But at least you know. And at least we're adding value. And they're like, oh, yeah, and I did 4 other strategies that you told us. But we always, we can always point to the IRS code that allows us to do it. So, again, no shenanigans. It's legit tax planning.
Yeah. Well, I love it, Ron. Thank you for being here. With one last before we head up, before we go, could you just state how could people get in contact with you if someone's listening? Like, man, I really like Ron. I want to get a hold of him. What's the best way for them to do that?
So I'm pretty active on 2 social media accounts. Twitter is my first name without my middle initial, my first name and last name, Ron Cruthers. You got to spell my name right, CARUTHERS. It'll probably be on this somewhere. On Instagram, for some reason, I'm Ron O. Cruthers. And beware, because on Instagram, there's a bunch of imposters. So I will not be like trying to direct message you asking you about your crypto strategy. That's not me. It's a fake account. And Twitter's great. Like, their bouncers will come in even before Elon bought them or anything. Their bouncers will come in and throw an imposter off like immediately. Instagram, I don't know what they're doing, but they're not fixing that. So you can just send a message in there, and provide content fairly frequently. I won't say daily, but at least a couple, 3, 4 tips a week on each of those sites. And usually they're different. Or you can just shoot an email to my office, which is info@roncruthers.com.
Awesome. And we'll have both of those in the show notes, so that'll be easy for people to catch up. And if they didn't catch it,
right, you'll get me. And or you'll get somebody on my team. We'll book an appointment. We'll chat. We'll see what's going on there. So
Well, I really appreciate it, Ron. It's been exceptionally valuable. People can take action now. There's no reason they can't take action. If they need help, they can reach out to you or their tax professional, and they can go get it done.
And the only thing I'll say on this, Justin, is just remember, we talked about one strategy. There's dozens more just like this. So you may be, like I said, I don't have kids. I don't know. Even if you don't have kids and you made it this far, what we wanted you to understand is this is the sort of stuff you want to be looking into and thinking about, and your person should be looking at. So I'd be like, great, don't have kids, call us when you get them. Or if you have a niece and nephew or a grandkid, we can find a way. But there's dozens of other strategies like that. So this is one area to pay attention to.
Well, Ron, I really appreciate it, and thank you. And I appreciate everyone for listening. Thank you for listening to Small Business Tax School, and we'll see you next time.